us. So Shamika, thanks for putting this together. I had talked to Shamika a couple weeks ago and just let her know that there were a lot of things that we were noticing as we are, interacting with facilities through our clients that we fund. First of all, PLEX Capital is a funding company. We're the go-to funding company for healthcare staffing industries or staffing agencies. And so, like I said, a couple weeks ago, I had the opportunity to talk to Shamika, and I said, I think there are a lot of new things that we're seeing, and we want to make sure that we can share this information with all the staffing agencies, information that can really save your business and help you be proactive in many cases. So for this, I will have my business partner, Josh Good, actually present on everything that has to do with understanding business credit. He's been doing this for over 20 years. Anything that is related to commercial finance or finance itself. And so he has a really good understanding of everything that goes into it. We don't know everything, but I think that he knows quite a bit. And I think that that knowledge can definitely help you with your business if you're currently looking at getting started, or if you're currently operating and you're facing some challenges with facilities and analyzing and really understanding when you should give them credit. He is going to be able to provide you some really good tips. So, Josh, I'm going to go ahead and let you take over.
Sure. Well, thank you all for allowing me to put this presentation together. Amanda shared a little bit about my background. Most of you that are active in the NOSA group, you've probably seen and heard a lot out of her, not so much out of me, and I'm okay with that. So I'm the Chief Operating Officer with PLEX Capital. I handle everything as it relates to operations, risk management, credit underwriting, that type of stuff. So whereas Amanda kind of handles everything on the front end. Looking at the participants on here, I know a handful of you, so thanks for hopping on and supporting me. Yeah, we'll go ahead and get started on this. So everyone should be able to see the screen, and then if there are questions that pop up as we go through here, I may or may not be able to see them, but we'll definitely get to them by the end of the presentation. So again, title of this, who to approve, how to monitor them, and what to do when things go wrong. So just give everyone a little bit of the current state of the industry as I see it. And this is purely from the perspective of a finance person. So I'm not a nurse. I don't staff nurses. I don't staff facilities, just purely from a finance standpoint. So these are some of the articles that have come out recently. So we say some of the things that are going pros for the industry. One beyond here, 94% of nursing homes are facing staffing shortages. Nursing homes struggle, survive the vaccine mandate. Staffing market, global staffing market to be $47.5 billion the next 7 years. And then conditions are
industry to grow sana the next 7 years.
And then,
hey, Leah, can you mute your phone for us, please? Thank you.
Hi, Leah. And then conditions are ripe for industry consolidation. And these are just some of the various publications that I review on a regular basis to try to stay on top of the industry. So if you look at those highlights, typically those are going to be a very good market for a healthcare staffing agency. You look at some of the things to be concerned about, which as a credit person, these are the flip side of things that we have to look at. The nursing home industry as a whole is projecting a massive revenue loss per the American Healthcare Association. They're projecting 1,800 closures or mergers due to the pandemic. Occupancies are at an all-time low at skilled nursing facilities. And they have this is 2018, nursing homes have a 94% staff turnover rate. And if you dig deeper into that, again, these are all pre-pandemic numbers, but if you dig deeper into that, nursing homes with a lower rating, that turnover rate is well over 100%, in some cases up to 200% for certain positions. And for those of you that are active in the industry, you see that, right? You know, the administrators are turning over constantly. You know, BOMs, just personnel in general, have a very, very high turnover rate. And then the complexity of the ownership structure of a nursing home makes credit and giving credit approvals challenging at times. So we'll kind of get into some of the basics as it relates to business credit. You know, the first thing I always say, when you're going to evaluate a business and see if you want to extend credit to them, you kind of got to throw out everything that you know, particularly about individual credit. There is no magical FICO score as it relates to a company's business credit report. There are various third-party credit services. What they do is they'll go and collect payment data, whether it's from utilities or landlords, banks. They collect all the financial data, compile it, and then turn around and sell it back to businesses that are interested in that data, such as PLEX Capital, or individual companies or banks. And so in that way, they do work like the traditional TransUnion, Experian, Equifax. And then so they collect data, then turn around and sell it. But unlike consumer credit reports, they're very expensive. Business credit reports, and they're not uniform. If you look at any of the three major personal credit bureaus, really the structure of the data is very, very similar. But if you go to some of the major business credit reporting agencies out there, it's not all the same. Again, there's no score that you can just kind of base things off of. So as a staffing agency, when you're providing staff to a facility, it's important to realize you're providing credit to that facility. Unless they're paying you up front for your staff to go in there, you're extending credit to them, and that's going to be on an unsecured basis. So there's no collateral. It's just that facility's contractual obligation to pay you. So your trade credit. So if they don't pay you, you can't go and, you know, pick up the nursing home and take it with you, or hospital beds or anything like that. You're an unsecured creditor. So it's very important to look at this from the standpoint of, is this a business that I want to extend credit to? If so, how much? And then it's also important to know, what entity are you actually contracting with? Who is responsible for payment if there's a VMS that's involved? The way that the skilled nursing facilities typically are structured, you have the name of the actual facility, but the name is typically just a DBA. That's not the actual entity you're contracting with. So where it might be, you know, Josh Good, you know, assisted living, the actual entity that owns that facility may be Josh Good LLC. Well, that's the actual legal entity that you're contracting with. And then if you peel back the layers of the onion a little bit more, you might realize that, you know, Josh Good LLC is owned by another entity. The building is owned by another entity. All of the administrative staff are provided by another management company. And so you really have to kind of understand who it is you're actually working with. For those of you that are familiar or use various VMSs out there, like the Great Tree, ShiftWise, Career Staff, if you look at your contracts that you signed with those VMSs, typically the VMS is only obligated to pay you if they in turn receive payment from their customer. We call that a pay when paid contract. And so sometimes it's important when you're looking at the VMS, depending upon how reputable that VMS is, you may want to actually look at who their customer is. And because if their customer doesn't pay, contractually, they're not obligated to pay you as the staffing agency. So you boil it all down. Personal credit is a science, right? Everyone understands personal credit scores. You know, everyone knows if you have a 400 credit score versus an 800 credit score, typically what that means. It's very, very easy to just look at a 3-digit number on a personal credit and say, to somewhat gauge the risk involved. Whereas business credit it's an art form. Okay. So when you're looking at business credit, again, as an art form, you talk to a bunch of different artists, they're all going to have their own opinion on what matters and what doesn't. So what I'm providing you is what my opinion is, based on, being involved in credit and underwriting for the last 20 some odd years. So number one thing, and this is the same as first, is payment history. You want to see, is this business paying their bills, and are they paying them on time? That is the top indicator of whether or not you want to be someone to step in and offer credit to them. You don't want to just be the next vendor that doesn't get paid on time. Time in business. And when I say that, you want to separate the time. It's the actual entity that you're contracting with. How long have they been in business? Okay, so separate the actual building and the building name from the business you're contracting with, because they're not always the same thing. So whereas Josh Good Assisted Living, maybe that building has been there for 100 years under that name, but the underlying entity that owns that, maybe they've only owned it for 30 days. So just because the facility has been there forever doesn't mean the entity that actually owns the facility has maintained ownership for that period of time. And as we see more and more consolidation in the industry, that is something that you want to be mindful of. Does the facility, are they using a management company? Is it a reputable management company that you have had some history with? Some management companies aren't very good at managing things. And it just can provide headaches. Do the owners manage other facilities? There are third-party websites you can go out to pull up the data on the facility you're looking to extend credit to. You can dig down and see, do the owners or the management company, how many other facilities do they manage? And that can kind of give you an idea of their experience level. So if this is a facility with a new owner and that new owner doesn't have any experience or history managing other facilities, is that really someone you want to go and extend credit to? I would say probably not. Let someone else be the guinea pig to see if they know how to pay their bills on time. You want to look at the occupancy rate. Think about a facility with their patients in there. It's kind of like the hotel business. If they don't have patients in there that need to be taken care of, that's where their revenue comes from. So if they have a very, very low occupancy rate, that's not a whole lot of money coming in. And whether they are at a 20% occupancy or 100% occupancy, their mortgage payment's still the same. They have insurance. So they have fixed costs that they have to cover. So when you see reports of extremely low occupancy rates, that's a sign of concern for the medical industry. And a lot of these facilities, they've been propped up by various government programs here in the last year during the pandemic, but at some point that money will run out. So you really want to look at occupancy rate, and then the CMS rating. The way I always look at it, if a facility is poorly run, they're probably not going to be very good at paying their bills on time either, because a poorly run facility is going to have a ton of turnover. You're going to deal with a different administrator every single week in some cases. And because of the processes that are in place in order to pay invoices, it can be very, very challenging to get your invoice through the system. So here are the things that don't matter, in my opinion, as it relates to business credit. We touched on it a little bit. They say the facility's been there for 100 years, so they have to pay their bills. How could you be in business for 100 years? Ignore that. You're only looking at the actual building that's been there, or a company name that may have changed hands 100 times over 100 years. So how long a facility has been sitting there doesn't really mean anything as it relates to credit. I know the administrator, they assure me that they're going to pay me on time, or they're calling me, they're begging for staff. So, they would never not pay me because they really need my staff. It's really nice, or a brand new facility, or they're owned by a bigger company. I hear some of these things all the time as we get credit requests that are coming in. Oh, I know they're good for it. Well, I mean, as a someone in credit, you have to look beyond those types of things, because if I'm a facility and I'm an administrator and I have to have staff in there, I'm going to say these types of things because I got to have someone to come in and take care of it. But don't confuse a facility's need for your services with their ability to pay for them. You have to separate out the emotions, which everything you read on this slide, these are, emotional reasons to extend credit to a facility, but they're not, true credit reasons to extend. So what I always go back to, especially when we're talking to new staffing agencies, the number one thing that you can do to ensure that you get payment is to have a proper staffing contract. So disclaimer, I'm not an attorney, I don't have a law degree, but I do stare at contracts all day long. And there are certain things that provisions you can ask your attorney to put in there that will help you in the event that you don't, you need to pursue various collection efforts against a facility. So remember, your staffing agreement is going to determine how much you get paid and when you get paid, which, I think everyone knows that, but it also is going to determine how you get paid and then what happens if you don't get paid. And those are the things that no one ever thinks about, right? It's, what are my rates per type of staff and what are the payment terms, right? So how much and when, not what happens if. And that's a very important part of the contract. I think a good staffing contract is one of the investments you can make as a new staffing agency. I see a lot of contracts. We'll have a new agency that'll send us their contract, say, what do you think? And I'll say, I'm not an attorney. Here are some things that I have typically seen in contracts, but go get an attorney in your jurisdiction, in your state to review it. Different states have different rules on certain business clauses. You don't want to go and just scrape an agreement off the internet somewhere, change your business name and call it a day. The money you spend to get a solid staffing contract the first time that you have to go, execute or litigate based on that contract, you will save yourself about 1,000 times what you paid that attorney to prepare to begin with. So some of the provisions that we have seen in what we would consider quality staffing contracts, we talk about a timeline to approve invoices. So if you send an invoice to a facility on a Monday, you want to know if there's any disputes on those shifts, because you're typically going to be paying your staff later that week. And so if they're going to dispute a lunch break or so-and-so didn't show up or that sort of thing, you want to give them a set timeline to dispute any of those charges, because you're relying on that to pay your staff. So you don't want to pay your staff and then 4 weeks later they come back and say, well, I don't show so-and-so took they took a break or they didn't show up or they left and never came back. So you want to reduce the period of time they have to dispute invoices. You want to have a clause regarding assignment, because of all the mergers and consolidation in the industry right now. You don't want to give, let's say you extend credit to ABC company, but then 30 days later they assign or they sell to XYZ company. You need to have an anti-assignment clause in your contract to say you can't do that without paying off any obligations you have. Your payment terms, including payment of undisputed balances. 30 days is the average. We're seeing more and more facilities that are trying to, I guess, pressure or take advantage, particularly of newer staffing agencies. So, well, if you want to staff here, you need to do net 45, net 60, net 90. Push back on that. Net 30 is what we typically see. And frankly, because most of these facilities, their revenue, they get paid per month through Medicaid. There's no real reason for them to try to extend beyond 30 days other than to try to get, free financing from their vendor. So make sure you have your payment terms are clearly disclosed in your contract. And just remember, the longer your payment terms, the greater your risk. So if you're billing $10,000 a week to your facility and you're on net 15-day terms, then your credit exposure is about $20,000, 2 weeks worth. If you're giving them net 60-day terms, now your exposure is $60,000, and you're not getting anything more out of it. You're just increasing your exposure, your expense when you extend those contract terms out. And everything is negotiable with a facility. And then please make sure your attorney has put in a clause regarding late fees, collection fees, attorney fees, etc. So in the event that the facility does not pay per the terms of the contract, you have some teeth in your agreement to go and charge them. And so I've seen agreements, they'll have attorney fee clauses, but they don't have late fees. They don't have collection fees. So if you're not using an attorney to go and collect on an invoice and your facility pays you 120 days later, if you don't have a late fee clause, you really don't have anything to go off of. So make sure you get those included. And then the last one we'll put in there is jurisdiction. Now, at least most of our clients are staffing in the jurisdiction is your state. So they're staffing in the state that they're located in. So typically, if you're staffing in Kansas, where I am, your jurisdiction of your contract will say Kansas. All jurisdiction means is if you have to sue your facility or this facility, it says in what state, and in some cases all the way down to what county the lawsuit gets to be filed in. So as a staffing agency, if I'm going to staff outside of my state, I am always going to want to try to have the jurisdiction be the state and county local to me. So if I'm in Kansas and I'm staffing in Texas, and that facility doesn't pay me, I want the ability to sue that facility in Kansas. So I can hire my local attorney here. The court, if it ever gets to that point, is down the street from me, whereas that facility, now suddenly they're defending themselves in the state of Kansas as opposed to the state of Texas. It is a very, very critical piece of your contract to give you leverage in the event of a dispute or non-payment. The vast majority, in my experience, of late payments from a facility to a staffing agency are caused by operational issues and not financial issues. Understanding the payment process will save you, I say save on Advil, whatever your headache medication of choice is. Understand the process. When you start setting up with a facility, you need to start asking questions on the front end. Don't wait until after you've invoiced them and it's 30 days later and you haven't seen your first check come in to try to figure out what has happened. Understand the process up front. So what we have typically seen is timesheets go to one individual who looks at it, compares it maybe to that facility's clock in, clock out system. Maybe there's someone there that signs off on the day-to-day punches of your staff. Typically, that's then going to go to the administrator, glances at it, says, yeah, that looks fine. Then maybe it goes to the business office manager, and maybe it stops there. Maybe that's the person that actually cuts the check and mails it out. Or maybe at that point, it then goes to a corporate office, and then it sits on someone's desk up there until it's time to pay. Or maybe there's a management company that's involved in various steps of the process. You want to understand on the front end who all has to approve your invoice or timesheets before payment ultimately gets made. And you just want to have that kind of mapped out. Outside of the administrator, are there other approvals that are necessary? Where do the payments come from? Do they come from the facility? Do they come from a corporate office? Is there a VMS? Is there a management company? Where are the payments coming from? And so understand this process up front, because keep in mind, in today's day and age, there are some facilities that are using agencies for the first time, or maybe it's a brand new administrator. And in some cases, we've dealt with administrators, they don't know what the payment process is. Maybe nothing has actually been put together as an entity. They don't even know how to do it. They just know they needed staff. They called you and sent staff in. So you want to make sure you have a very, very clear understanding of what that process is. Get the names and numbers and email addresses, and you can put it in your staffing agreement. Who is involved in the approval process? That way you can go, and if payments aren't being sent to you on time, you know who to contact. You don't want to sit there and call an administrator if it turns out it's the corporate office is the one you're supposed to be speaking with. Follow the invoices through the process, especially the first time you bill a facility. Follow that invoice through the process. Just call, hey, I want to make sure you got the invoice. Okay, did you sign off on it? Have you had any questions on it? Okay, who did it go to from here? And have that clear understanding. If a facility, and we've seen this happen before, you'll call to follow up on a payment, and they're like, well, that's at the corporate office. Okay, well, who are they? Well, we can't disclose that. Those are red flags in the process. You know, as a creditor to that facility, you have a right to know who ultimately is going to be sending a payment out. But understanding the process will save you a lot of headache and a lot of heartburn when it comes to getting paid. It is very rare in our experience for payments not to be made because, hey, we don't have any money today, so we can't pay you. Those are the types of things you cover on the front end by doing credit analysis on the business. You're trying to weed that stuff out. What you're not weeding out are facilities that just have operational issues where they can't figure out how to get an invoice through their process. So you mitigate that risk by having a full understanding on the front end. So the next step we'll talk on here, okay, how do you collect on past due invoices? So everyone's got their own spin on things. In my experience of dealing in business credit and business collections, here's kind of the process that I go through as it relates to collecting on a past due invoice. So step one is go back here. Do you understand the process? It does not make sense for you to waste time calling someone that's not involved in the payment process. So understand what that process is will make you far more effective on this part. Just like when you are selling to an administrator or a DON or whoever that you should be able to provide your staff in there, you're building a relationship with them. In business collections, it's very much the same. You want to establish a relationship with whoever it is that's paying the bills. So the things that you can do to help them is you can be organized as an agency. So when you're submitting your invoice, is it clear how you're billing your customer? Do you have clear entries of here's the date of this staff member, here's their position, here's their time punch in, punch out, their rate, and the total. Is it a clear invoice? Are the time cards, if you have to provide them, are the time cards you're providing, do they tie out to what's on there? The last thing that a facility or an accounting person, whoever wants to do, is spend a ton of time trying to understand an invoice and a timesheet you've provided to them. So build a relationship with them. Find out, hey, what's the best way for me to bill you to ensure that there's no questions? Figure that stuff out, again, as part of the process on the front end, and then execute it and do that. One, it separates you from a lot of other agencies who, you know, the billing process may just be, you know, they handwrite an invoice, throw a bunch of, you know, text message timesheets on it and send it out and hope it gets paid. You want to try to build that facility in a way that makes it very easy for them to cross-reference the time punches with the invoice and submit the payment. So build a relationship. So I had an old boss who would always tell me, you know, kill them with kindness. Just be nice. At this point, most business collections are really payment reminders. You're calling and say, hey, I billed you. What's going on here? Oh, yeah, I'm waiting on this approval from someone, or I haven't, I'm missing a time card, or I'm missing a sign off. Think of it as it's problem resolution versus calling and screaming at someone to send you money. There's a time and a place for that. Don't get me wrong. But on the front end, think of it as there's a problem. The problem is you haven't been paid. So let's figure out why, and then get to the resolution. Okay, what do we need to do to get this resolved? And here's what I'm going to do to help that process along. Be the squeaky wheel to get attention. Business collections is all about consistency. And when you call, you say, okay, why hasn't this been paid yet? You find out that reason, and then it's all about follow-up at that point. So if they say, I'm waiting on so-and-so to do this, great. When can I follow up with you to make sure that that has been taken care of? And then you as an agency follow up with that person. Or if they say, so-and-so, I keep asking them to do something and they haven't done it yet. Great, let's call them now. Let's figure out what the problem is. Maybe they have a reason. Maybe they don't. Maybe it's a new administrator that stepped in and the old one left a pile of unpaid or things that aren't done. And the administrator just kind of throws their hands up like, I don't know how to approve these because I wasn't even working here. We see that a lot with all the turnover. You can pull your staff out of there. They need you a lot more than you need them. And the last thing you want to do if you have a facility that's not paying you and you're billing them $10,000 a week, if you're $30,000 in the hole, you don't want to go $40,000 in the hole with them until you understand why they haven't been paying to begin with. So that's a big lever that you can pull and say, hey, if you want staff here to take care of your patients, we need to resolve this and we need to resolve it now. Make a site visit. Most of our clients, at least, the facilities that they staff are fairly local to them. It's very rare in our experience to be located in the state of Kansas and provide staff in Miami or Seattle, Washington. It's a much more localized industry, at least with our clientele. So we say, look, go talk to them. If they're ignoring your phone calls, just get in your car, drive over and have a conversation with them. Don't take baseball bats with you or anything like that. It's not that type of collections, but just go and sit down. Again, there clearly is a problem that needs to be resolved or solved. And by going out there, everyone can sit down like grown-ups, figure out what's going on. How can I help you? And see if you can work towards resolution. Send a demand letter that it can either be by the facility, that can be by if there's a funding company or a factoring company involved, they typically will have demand letters they can send out, or it can be by your attorney. It's kind of a formalized document that says contractually, assuming you have a good contract, contractually you were supposed to do this. You haven't done this. I've asked you to do it. You still haven't done it. Here's what's going to happen if you don't fix it. It's kind of the steps of a demand letter. The next one on there is turn up the pressure. Right now, in my opinion, staffing agencies, especially those involved in healthcare, have done a tremendous amount of good over the last 18 months during the pandemic. You're providing staff, caring for people. Your staff is going into harm's way with COVID. You're taking care of patients that are in COVID units. I mean, it's been a really, really tough year. And with all the turnover and all that, without healthcare staffing agencies, it would be a complete disaster in our skilled nursing facilities across the country. And most staffing agencies, particularly if you were new and you just started during the pandemic, you didn't get PPP money. You didn't get CARES Act. You didn't get all this stimulus money that was out there for businesses. The facilities you're staffing did. They got billions and billions and billions of dollars. So when I say turn up the pressure, is understand you provide a critical service to a company that received billions of dollars in government aid and now hasn't paid you, a small business owner. So by turning up the pressure, you can make sure that they're aware of that. If you know other agencies that may be providing staff there, you can make them aware, hey, this facility is not paying the bills on time. You can, in some areas, a local news station may want to pick up a story like that. And these are the extreme. These are very, very extreme. And as long as you're being truthful, there's nothing wrong with this. The last thing an administrator or nursing home owner wants is to have a news station show up out there asking them why they're not paying for the nurses that are being provided to their facility. So there are things you can do as a small business owner to kind of ratchet up the pressure, especially given given today's environment as it relates to healthcare and staffing. And then the last resort, it's always the last resort, is to sue the facility or to start the litigation process. Anytime you sue someone, the only winners are the attorneys, because they're the ones that are going to make all the money while they try to resolve a business dispute out there. So understanding that the vast majority of the time, the reason you haven't been paid is an operational versus a financial issue. Litigation should always be very, very far down the list of what you need to do. Now, the threat of litigation, that typically will speed up the resolution process, but to actually go file a lawsuit, so clearly there is some greater dispute that has caused that invoice to not be paid that's resulting in legal action. So what you don't want to do is, if you're on a net 30-day term, you get a 31-day invoice, and you immediately go, you have your attorney file a lawsuit against them. I would say it's your business to do what you want. I would say that's probably a little premature, and I would kind of go through the steps that are listed on here. Other considerations is what happens if a facility that I'm staffing has been bought out by another owner, management company, or what have you. So those are some considerations to have. I would say if a new owner comes in, I would hesitate to allow an assignment of any money that's owed to me to be transferred to the new facility owner, especially if you haven't been able to vet the new facility owner from a credit standpoint, and probably not even then. You'll want to make sure that you get a new agreement signed with the new owners of the facility before you continue to provide staff out there. What jurisdiction should you choose? Typically, it's going to be your best bet, the jurisdiction in the case of litigation, to be the state that you're in, and even better, the county that you're in. Some attorneys may give you the option to sue in a separate jurisdiction if you choose to. You know, some of you that utilize a funding company or factoring company, you may be advised to put in your agreement to allow litigation to occur where the factoring company is located. A lot of time a factoring company is very well equipped from a litigation standpoint. And so if your staffing agreement says you can sue either in, let's say, if you're based in Texas, you say Texas, or the state of Kansas, if you're working with PLEX Capital, that gives us the ability to initiate litigation here using our counsel. When you reach a certain size, you may want to look at various types of credit insurance that are out there. All credit insurance does is if you're working with a facility and they go bankrupt, this is insurance to pay for any receivables that are out there. So there are options out there once you reach a certain size with your agency. Diversity is a great way to reduce your risk of non-payment. If all of your staff and all of your work is at one facility, even if that facility has a great track record of paying, you are one, I guess, problem away from going to zero. If that facility has some type of massive lawsuit filed against them and they have to file bankruptcy, well, you're an unsecured creditor. So you're kind of out to lunch if that happens. So as you grow, diversity is key. Diversity in who you're working with. Try to be able to spread that risk across multiple facilities versus having everything at one. And then just always be monitoring. You always want to kind of have your hand on the pulse of the companies that you're working with. You never want to just say, well, they paid me on time today, so it's going to be good forever. You don't have to look very far back into history to see companies that have been around for hundreds of years that because of some changes in the market ended up filing bankruptcy and everyone got left out. So you always want to be monitoring your customers, particularly if there's turnover there and there's a new administrator. Well, you need to go and have a conversation with them. Make sure they have been trained and understand what the new approval process is. So always keep your kind of keep a good pulse of the customers that you're working with, because that can avoid heartburn down the road on it. So that's my 30-minute ish, I guess, kind of overview of business credit, risks, how to analyze it. It's a topic I could talk about forever. If anyone has specific questions on there, I put my contact information in the chat, but I'm happy to field any questions anyone may have now with the time we have remaining.
Okay. Oh. All right, so I'm gonna go ahead and jump in. I did see a few questions that were being asked, and I just want to make sure that everyone understands that there's so many things that you can do from the get-go as you're getting your agency started, or if you're already operating. There's so many things that you can do before it gets to to be a little bit messy. And so I do want to emphasize the importance of having the right agreement in place. We do see a lot of agreements. Josh spends a lot of time reading a lot of the new agreements from new agencies that are coming on board with PLEX Capital as a client. And it breaks my heart to see that they're going to go into a new business and try to put all their life savings and their efforts and their dreams and everything put into this. And then we have a sloppy contract. So, just put major emphasis on that, put some work into it, do go and spend the money. Don't just go and borrow one or steal one from your friend or whomever, because every situation is going to be so different. And then it matters in what state you also have the business. So those are some of the things that I wanted to touch base on. I also want to encourage you, as you are able to just turn on your cameras and then start participating for the next 10 minutes or so on a Q&A. If you have questions about anything, if you want to share some of the experiences you've had, please do so. And then lastly, we did have a situation recently where a client was being dragged for 90 days. This client had done everything correctly. It had provided all the services, everything they needed. And she ended up calling the local news and told them about that story. They were interested in picking it up, but she did it as something that was as a last thing to do. And she had everything in order. She had done everything correctly. So I think we have her here. Tanya, are you with us this morning? If you want to share a little bit about your story, that would be great. We just need to unmute you.
Yes. Well, I was dealing with a client which did get new owners. The new owners in turn stopped payment once they took over. So once they took over, it took about 90 plus days. Numerous of calls, emails. I got Josh and Bob and asked them to get on with me and start sharing the emails with him, and just seeing how they would just go back and forth telling us one story and telling us one thing from the next, never want to pay. So finally, I sent an email to them stating I was going to call the local news, which I did reach out to Action News 9. And they stated to me, if I didn't receive payment by the time I stated, which I said I wanted it by 5 o'clock that day, or I'm going to call the news. As soon as I mentioned something about contacting the news, the payments start rolling in. And just recently, Josh stated to me that they received their last payment. So they are now all paid up. And I think they started out with about a $67,000 debt before we got all the money. So I really appreciate Josh and Amanda to being patient with me. PLEX Capital has been so excellent. I don't even know what I would have done without them. So I really appreciate it. If you have any friends, I would suggest that you guys really stick with PLEX Capital because they have been awesome to me.
Tanya, I appreciate that. And I think, whenever we as a company enter into an agreement with an agency to provide funding, we always look at this is a partnership, and especially as it relates to following up on invoices that may be past year beyond terms. We don't try to pass the buck, say, well, that's you, the agency, it's your problem. Just like we don't expect the agency to look at us and say, well, that PLEX, that's your problem because you funded them. We look at it as a joint effort. And to Tanya's point, what we've seen a handful of times is you'll get a new owner that will step in, and then immediately what they'll try to do is start negotiating down on staff, either staff that's already worked or future staff, which is their right to do so. But typically they're trying to go after and immediately cram down because they buy an agency and immediately try to cut the costs down. So just be aware of that, and you'll want to get, if there's a new owner that comes in, one, you'll want to have a clear understanding of what's going to happen to any invoices that are currently due under the previous ownership. And then before you provide 1 hour of staff, you'll want to make sure you have an understanding of what the charges are going to be, going forward under the new ownership. Okay, so my business partner told me something to follow up on here. So, okay, talking a little bit about receiving ACH payments versus checks, discounts for early payments, et cetera. So it should be in your staffing agreement that your expectation is to get paid via direct deposit.
Okay.
When possible. And the reason for that is multiple. One, direct deposits don't get lost in the mail. We had a heck of a time last year. The Postal Service was severely impacted by COVID. Payments got slowed down. The Postal Service is intentionally slowing down mail right now. And there's just no reason for, frankly, people to be mailing checks out on anything, especially these businesses. It's not complicated to pay someone via a direct deposit. And so we do encourage everyone to try to ask for that, because if you're allowing a facility to mail a check to you, what typically happens is a check is printed on a Thursday, it goes to whoever's supposed to mail its desk on a Friday, and then they get busy, and then by Monday of next week they go and put it in a mailbox, which gets picked up on a Tuesday, and then it gets mailed on a Wednesday, and then takes a few days to get there. So a check that was printed on October 1st ends up arriving on October 11th or 12th, when all they had to do is set up a direct deposit and it would have arrived the next day. So not everyone will agree to doing that, but you should at least ask. Because it's not complex. We have some of our clients that allow the negotiation with the facility is that we actually withdraw payments from that facility when invoices come due. That way we're not at the mercy of their accounting department or approval department. That's kind of an extreme case, but it does ensure that payments are made on the day that payments are due. But we do. The mailing of checks is a very it's kind of an antiquated process. I would say it's the same as using handwritten time cards, but I know a lot of you all still use those. But try to get your facilities to pay via direct deposit. The mail will just continue to be a very, very slow and inefficient way of collecting payments. Anyone else have questions for me?
Yeah, you can feel free to unmute yourselves. I muted everybody just so we can get through the presentation, but you can go ahead and unmute yourselves if you have a question.
I will take that as a sign that I answered every question in the presentation.
So I'm going to jump in again. Shamika, do you have any other tips, maybe, from what you're seeing in the industry, any other things that we might have overlooked that you want to add to this presentation as well?
No, I think you guys actually covered a lot. Some of the things I actually learned myself. I think one of the things, and that I would reiterate would probably be around just reading the contracts. Having worked in career staff myself, the contract is about 58 pages. And it's worth printing out the whole thing and just highlighting and then going back again, because they do have some of the language around the assignments and the payments that's not for us, but I know some nurses have gotten hung up on, especially since Genesis has sold a lot of their properties to other companies. So I would definitely, if you need help, Amanda and Josh can kind of, identify things that you may want to pay close attention to, but read your contracts for real.
Yes, it is so critical. And I know that contracts, I always tell the story that, when I graduated high school, I thought I wanted to become an attorney. So I went and started my paralegal degree. And after I realized how much research and reading and all of that went on, I said, okay, I don't want to do any of that. And I always start that line, especially when I'm reviewing contracts with my clients, because I know it's boring. I know it's time consuming. Some of the language will put you to sleep. But as a business owner, as an entrepreneur, you need to get in the habit of doing it. So if you ever speak with me about contracts, I am going to be pushing you to read them. And this is coming from someone that absolutely dreads reading contracts. Typically he's the one that is going to be doing it, but it is just so critical. That's your business, that's your livelihood. So put a lot of attention to that. And then once again, I did make a note of this. With Tanya, she was able to do what she did and to be able to collect and put more pressure on that specific facility. She could have lost $65,000 if she was being sloppy with the way that she operated her business. But she had everything in order. She had time cards. She had a contract that was fully executed. So all of the things that we have talked about are so critical for your business and for you to actually do it. Because if it comes down to a facility that is just not wanting to pay, or they just are dragging you along, you're not going to have anything to stand on if you really don't have everything the way that it should be. So don't get sloppy with your business. Don't be too busy to operate a good business. Okay, and then I think we have a few more questions here, Josh, as well. Let's see. What is the percent of bill do you guys fund? Typically, we're going to be funding about 85% of the total amount. And we can definitely have more specifics about that if you want to reach out to me. I did add my calendar here to the chat. So feel free to just go and schedule a 30-minute call with me, and I'll give you all the ins and outs.
And then just, I know we had a lot of people kind of join it as the presentation started, but so Amanda and I are the co-founders of PLEX Capital. We do payroll funding primarily in the healthcare space with healthcare staffing agencies. Amanda is the CEO of the company. She handles everything kind of front end. You've probably seen her talked about quite a bit within the NOSA group. And then I'm the chief operating officer, so I'll handle everything as it relates to credit, underwriting, risk management, among a few other hats that I wear at the company. So I know some of the, looking at the attendees, some of the individuals I talk with on a fairly regular basis. So thanks for popping in and supporting me on here. But at the very beginning of the chat has our contact information for our business. If anyone has a facility they want me to run credit and give some feedback on, feel free to just email me. Just give me the name of the facility and then where they're located. A lot of facilities have similar names. If you just say, XYZ assisted living, there might be 100 of those in each state. So just give me that data, and I'd be happy to share what our findings would be and what type of credit limit we would extend, if we were being asked to do so. But I'd be happy to do that and provide any additional detail or clarity on everything I talked about today. It's what I do.
All right, coming back. I'm like in and out. Sorry. Well, I just want to thank everyone for being able to attend. This is a lot of information. Again, it's not necessarily like the fun part of the business, at least not for someone like me with a type A personality. But those are the things that are necessary for you to make sure that you have a sustainable business and that you are able to collect. We are always here to help you out. I see a lot of our clients that are here as well. They can tell you how we closely work with our clients. So if you're not one of our clients and you would like to just chat with us, I welcome the opportunity. But this is it. Thank you so much. Enjoy the rest of your day. And Shamika, thank you for putting this together as well.
Thank you guys for giving us this amazing presentation. And thanks to all the group members for jumping in. And I hope you guys have a great Monday. And it'll be saved into the group.
Yeah.
Great.
Thank you, Josh.
Thank you very much. Bye-bye.
All right, thank you.